Welcome back to Mass Appeal. Birthdays, they may seem less important as you grow older, but there are several key birthdays that can affect your retirement finances, and here to tell us about a few of them is the owner of Bond Financial Services, Dylan Bond. Dylan, happy Wednesday. Pleasure to have you here on the couch. So there are these ages. The first one is 50. Now, what do people need to know at 50?
Well, 50 is one that I've created, and I think 50 is the time you should be contacting me to start talking about retirement.
If you haven't already.
Exactly. You know, one of the things that I find when I meet with people week after week is that one of the things they have in common is that they wish they started earlier. Okay, and a lot of times people that are retiring at 62 are coming in to see me at 60, 61. Not that that's a bad thing, but the sooner they start thinking about it, that they can make different changes to their portfolio sooner than later, that might give them a better predictable income stream or plan going forward when they start earlier.
And the earlier you think about it in life, the larger pile of money that you can create to then have interest gained on year after year.
Yeah, I mean, obviously, the sooner you start saving money, the more you'll have in the long run. So that's another good point.
So everybody needs to start right now.
Start right now.
Second age, 59 and a half.
Yep, 59 and a half is the age that you can start to take withdrawals out of your retirement accounts, like your IRAs, your 401ks, without having to pay a 10% penalty to the IRS. So again, another key number for 59 and a half, even if you're not planning on retiring until full retirement age, which is 66, at 59 and a half, if you work for a large company, your 401k might allow you to do what's called an in-service withdrawal. And that will allow you to roll money out of your 401k while you're still working and still employed, and start setting it up outside and using different types of accounts that will give you a better plan going forward into retirement, so you can start 5 or 6 years early, so that when you walk out the door at age 65, you're not panicking and wondering what you should do.
Or like we had a few years back, if the 401k market kind of nosedives, then you're set.
Well, that's a good point, because most 401k programs and plans are stock and bond mutual funds, and as we all know, stock markets are very volatile, and based on recent press, the bond market does carry a lot of risk that people don't understand.
And as you age, you need to start minimizing that risk.
Absolutely.
Speaking of aging, our next age, 62.
Well, 62 is the age in which you can start to collect Social Security. Again, that's a case-by-case basis. When we're talking with people, there are people out there that we're talking about taking at 62 Social Security. Others that would wait till 66, which is the full retirement age. And then in some cases, you would want to wait till 70. Because if you wait till 70, for every year you defer, that monthly income will grow by 8% a year. So again, it depends on the other assets that they have, what type of money is it, but it's a case-by-case basis. That's why the sooner you start thinking about this stuff and talking about it, the more options and better knowledge you'll have to make better decisions.
That's the thing, when you talk it out and you realize your life and your lifestyle, you can make all these decisions to help impact your life more and have a more fruitful retirement. 65, the next big age.
Yeah, well, 65, and I would say 66. Well, 65 is Medicare, obviously. 65, at that point in time, you can go on the Medicare system, and that will help alleviate some financial pressure from having to finance your own health insurance. And then again, we roll into 66, which is full retirement age for Social Security for most people right now.
Now, lastly, 70 and a half. It's the last big age to know about.
Well, 70 and a half is when the IRS will start forcing you to take minimum required distributions from your retirement accounts.
So that's when you need to start taking that money out.
That's when you need to start taking that money out. And it starts off, on my website, there's actually a calculator that will allow you to type in the balance of your account, your current age, if you're 70, 71, or wherever you are, and it will tell you how much you have to take out. But again, we're talking with people nowadays and saying, look, if we can create a plan that will start to divest your retirement accounts through your early retirement years, and use that money over a longer period of time at a potential lower tax bracket, we might want to start doing that sooner than 70 and a half, rather than accumulate a big tax time bomb that you're going to be forced to take out at that time. So
And-
again, there's a lot of things to think about.
So much to keep in mind. That's why people go to you, and that's why people also go to your seminars. Now, real quick, tell us about those.
Yeah, well, my job is to get in front of as many people at or near retirement as possible, talk about what I do and how I think, and then let them make a decision if they want to meet with me or sit down and talk. Now, the seminars that we do at local restaurants in the area. We also do them during the summer at local golf courses. And what it is I talk for about 45 minutes about some of the common things that people should be talking about in retirement or thinking about in retirement, common mistakes people make, some of the factors that are affecting people today, low interest rates, longer life expectancies. And then they can have more information about what I'm doing out there and make a decision if they'd would like to come in and meet with me at that time.
Well, Dylan, thanks so much for stopping by today.
You're welcome.
I like having you here every Wednesdays. And you can visit bondfinancialservices.net or call them 413-754-4747. Just let Dylan and the staff take steps to secure your financial future.